Another V-shaped day. Yeah, it was interesting. It was interesting. I think you're kind of right. I think if you look at it from the SPY perspective, Nasdaq did 1% today. You look at it from the S&P side, it kind of was like that, where it's really, I mean, I think from my point of view, I didn't really look at this as like a downwards move. I just saw it as everyone going to growth, and so there was like this it's not so much rotation, it's just sort of for one thing to go up, something else must go down, and so then you saw really the end of it. But I mean, growth just popped off. We saw it from Apple in the beginning. Uh, as soon as we saw Apple this morning, I just knew that that was it. That was it. That's really, I think that was the final sign to see that growth was gone. And I've talked about it that all the mega caps. I mean, it's just been the money here is just completely different. It's just so much different. If we look at the mega caps in total, 2.5% today on Apple, followed by sort of a pretty good week, but really a week and a half that's been good. 5.5%. Now another 2.5. Amazon had a great week last week. Had another good day today, 1%. But this also was during the day a little, you know, little sideways. Didn't do much, but at the end of the day, we got bid everywhere. I think everything just got kind of pushed to the end of the day. I'm not sure if uh, some of the other players were waiting till the end of the day instead of the open. We did see I would say a pretty sizable amount of volume come through. So it was sort of a Monday entry still kind of day. Microsoft 1%, Google 1%, Facebook 1.5%. Tesla was at 2%. That pulled back a little bit. I think that's probably where uh, some of the downwards ideas came from. Is that we saw clean energy up all morning, and then we came down. These came bid, so this was 1.5% for Tesla as well. Very happy with the start of my position there. But really, I think Apple is just the thing that matters the most, and it's going to have a week like we saw with Amazon last week. But I think there's a big difference here is that now the Nasdaq is all-time high, and we're seeing this confidence that we haven't seen really in quite some time, and it's why we jumped on sort of the opportunity with mega caps to take advantage of who's going to lead the move. Where was money going to be put? It's mega caps, and we've seen the treasury market hold up to inflation numbers, to basically everything that's come out, and it's not correlated in such a way that it's going to be negatively impacting growth. Where again, when these yields are changing in the way they are, it discounts growth. We're not seeing that actually play out because there's no correlation between the two, which is why that's such an important point to make. Is that really the yields should be insinuating that the growth is going to be discounted in the future, but because the cost of capital is going to go up, that's maybe true for growth overall. If there was a correlation, we found that there is no correlation. But the other fact is that mega caps don't give a shit. They have so much cash, and they always have revolving cash that they don't have to worry about the cost of capital. That does not. It doesn't matter to them. This is not a factor. They don't need to worry about those things. They're just so cash heavy. Their problem is how do we spend this damn money? And so that's really where the money's going because there's an understanding, I think, that okay, these numbers are ridiculous. This idea of what we're talking about, of this reopening and really this inflation coming through, is something that is going to affect everybody, but especially affect the top. And we're seeing this top heavy nature, the leading sort of factor. I mean, I fucking loved it. I love the move. I'm glad. I'm glad that I think it's. I think we're gonna hear some stories of the value transition we had was great, and I think it was a great sort of posture from the election, right? But what's important is that during March, that end of March, the March 25th sort of date that we've talked about, we started to take this value sort of only approach and start to put it back into growth, right? And this is where we took the first entry over here on the Nasdaq side of things with mega caps, right? And we took that move and we really executed it as a swing trade, and it was very short term heavy, and we knew this was going to be just a moment and we took that up to all-time high. We understood the consolidation and the pullback that sort of happened with this due to what was happening with yields, and we saw a lot of reaction, and we had questions about it. But then when this sort of moment emphasized itself again that there was no correlation, we took advantage of it and bought at lows for specifically the mega caps, understanding sort of what was going to come from that low. If you look at the overall, there's a lot of tech stocks that are not up today. And that's again an approach where if you look, it's really the names that did well. It's not, again, there are charts that I was looking at that have put moves and they sort of have generated their own velocity, but it's really the names and companies that are large that put the moves on. We saw this also with value switch from small caps to large caps on the value side. And so I think it's not that hard to sort of connect these two, but the point I want to make here is that it's the rotation and the ability for us to go in and grab this before it happens that's so important. We did it with the transition to value from the presidential election, understanding that spending now means gains now on value and not in growth. And then what we did was through this just recent pullback, continue to buy lows and hold these positions for more upside. And now we're really getting paid for it because, again, we've taken positions that had low volatility and we're doing nothing. They didn't seem like they're going anywhere, like Apple, Amazon, right? Amazon has been trading in a range forever, not doing anything. And we stuck with these positions, stuck with them, held them. I kept saying, buy them, we're going to buy them, we're going to stick with it. Again, growth, yeah, we may have more value continuing to be bought. That's going to help our value positions. But it's really these ones that are going to have that next move. And so it's really being in position and sticking with an idea and really just having the confidence, right? And I've, of course, changed my tone over the last couple of weeks of being more risky and taking more aggressive sort of positions. I hope that hasn't been lost in translation, that if you were aggressive last week and coming into this week, this sort of 2 week sort of range here, you are getting paid quite a bit compared to just being sort of the long-term approach that we have been on for a very long time, right? We've been very long-term in trying to be protective, understanding that it's going to take a longer period of time to get paid the same gain as now what we're trying to do is a swing trade in a short amount of time. Yes, we want to get paid on the long term, but we want to take the gain right now. We want exposure to the move that's happening right this moment because we saw that there was a move coming. We knew that there was something coming. Whether it happened or not, it doesn't matter. It did happen. So again, we don't need to use some weird hindsight Nancy logic and go, well, we're just looking at hindsight. No, we put the money in and we're getting paid for it because that's how it fucking works. You don't put the money in and you don't take advantage and you don't get aggressive and put more risk on, you're not going to get paid for risk. You have to put risk on. And so, again, I hope it's not lost that we really positioned for the most recent move here. And you can look at it however you want, and the chart may look a certain way, but I think it's really important to understand that we just put all-time highs, blew out all-time highs on the NASDAQ from a point at which it was really behind. And what's really important here is that it's not just, here right now. It's not just, here and gone. This is a sort of move that is now developing into a rally that is going to put a lot more points on. That's what the signal is. There's one way to look at it is just look at something like Google. This move has not sort of stopped, right? Don't you think this is kind of a leader here? Just like when we look at the Facebook chart, Microsoft chart, don't you think these are sort of leaders of the idea of what we're going to see here? And if the largest companies in the market, in the US equity market, can have this move, it's really not that hard to ask the average to do the same. These are larger than every single other ticker almost combined, right? Honestly, that's the mega caps are more than all of the others combined. If they're able to do it, now that we have Apple and Amazon coming through here, it's going to continue. And being in position already is going to be, again, the ones that are in position are going to be the ones that are going to actually profit from this, because there will be volatility to come. There will be swings up and down. And by being in position, we now have sort of control. We can take profit when we feel like we need to. We don't have to be begging the question of like, when the hell do I buy? How do you buy some of this stuff now? Just for those of you that were in the options, some of these options have like completely changed what they are. They've now developed into, okay, this is probably going to go way fucking higher. That's literally the look of some of the options, that okay, this is actually going to develop into something very volatile very quickly, and that's most likely right. It's most likely being priced correctly. And this is sort of, again, off the back of no volatility. There is no volatility in the market yet. Here we are continuing to be volatile. It is volatile to be pushing through all-time highs like we are. Is this not volatility to put points on like this, to be back and forth, and again put new records on again on the S&P as well. S&P as well continues to trend higher low, higher high. That's the most important point. And now we're seeing more demand again come through on a side in which we have the biggest discussion of inflation basically ever, because again, it's going to be a monumental task to figure out how exactly some of these things are going to play out with the money supply, how the Fed is going to play out. There's so many things that could happen that the market says doesn't matter. We're gonna take the gain now. At the same time, we have retail tickers continuing to put points on as well. And again, there's just overall demand and overall risk taking, but it's a little different this time, right? We're not risking a downside move in the same way, because it's a different level of buying, right? It's not a buying that is, well, I don't know, but it's going up, so I'm just buying it too. Like, hopefully I get out before everyone else does. That's not what the tone is right now. There's this understanding that overall that this is actually the place to be, and we're not crowded. We're not in a place where you know, we have one thing doing better than others. For instance, we only had value doing well, 2 months ago, a month ago almost. That was the only thing you could buy was value, because we were like, well, shit, inflation. This is the only thing that goes up with inflation for sure. It's hard to tell if growth is going to do well. Now we have both, right? We don't have to ask that question anymore. Everyone's willing to buy everything. That's where we're at. We see the bond market being very cool and collected, not really doing much. We had questions. I think today answers it a little bit more for me. We did not see the bond villain sort of, okay, well, it's time to go buy all the bonds or sell all the bonds and try to make a statement. We've seen it in the past come up. We didn't see it. Maybe it can still happen this week. We have FOMC, and maybe something like that happens. But today is the start, and it's not the end, right? If you put one, again, I want to make this clear. Whoever and everybody is buying here today is not done buying. This is not just a one-day buy thing. That's why I want to use the Apple chart as an example, because it's the one that's coming off the low and has the most points to still gain, about 10% of the all-time on Apple, and it hasn't done anything. The biggest. This is not one day of buying. Whoever's putting orders on is going to continue to put orders on. That's just a reality. That, again, you do not just randomly buy some stock and then you're done in a day. Who out there can get filled on their entire order in one day on the largest company? It's not going to happen. It doesn't even matter. The volume today, let's see, was at 93.5 million. Significantly over the average. The price still barely drove up. 2.5%. That's not driving price up too much. That's not full everyone's order, right? That's not what it looks like. And so I do think that this is sort of the proxy to the rally, because if you look at every single mega cap, this is the one that has the most upside to a point at which we understand the price, which is to say that in terms of the all-time high that we put on prior to the beginning of the year when we really peaked out, it still has all that price to recapture. You know what we've been doing since last year is just recapturing price levels, right? That's literally all we've done. We've been buying things that are going to be reinvigorated and get back up to where they were before COVID, right? That's really been every trade that we've made. Beyond, again, the tech side, which traded past that very quickly, and now we're in a different realm. But we still have talked about this with a lot of trades. This is in our wheelhouse. We understand this trade pretty well. And we understand that even if it's not going to make it there, we can take the swing up there because that's what people believe. There's speculation it's going to happen. It's very hard to look at this chart and not speculate that that is going to happen. It didn't happen in this rally because we had macroeconomic events that said no. And it was very easy to see that. If that's going to be the case again, then we'll see it. We'll know if we need to get out of a position like this. But as I said, we do not want to exit these positions if we don't have to. These are the ones that, again, are going to put the points on, and it feels different. It does feel different to be in them comparatively. Looking at other charts, we had a lot of bios make a lot of moves today. I'm going to mention it. We had the Novavax or whatever come out with a 90% success rate with the vaccine. So we saw a lot of rumblings around. We did see the entire bio sector still increase on the day. Well, again, just sort of hits and misses everywhere. It is important to see how there's at least some flows going on. So people took, for instance, our Moderna chart took some profit at Moderna to go enter elsewhere. Those things are happening like we see in the rest of the market. That's good. Price action trading going on. We see it overall. It does look like that sector continues off of everything. We have things that are sort of generating their own velocity in different sectors. And so I say that as we have some names that have put more points on than others in their perspective sort of industry. And this is, again, where we've seen these technical breaks sort of happen and they continue to put the points on. So again, the leaders in those that are breaking are still the more bullish of tickers. We saw Square Inc. here catch up to PayPal, breaking through the 227 that we saw this morning, holding it after doing sort of what Apple did, the pullback into support bounce. We saw Roku continue to put points on. Again, our weekly chart that we had just taken on the trend line break over here. This is a move that's, okay, when you talk about upside, I mean, when you talk about coming back to the high point, right? Here's a chart that we've seen significant moves on. I mean, this thing, look at the trend through here that we were a part of, right? This was ridiculous. Again, it really is ridiculous. The amount of points that we put on some of these charts and continuously, just nonstop. Now that we've broken out over here, this is, again, looking like what's going to stop this move. We did it before, and we're at a lower point than we were before, right? We just have to recoup some of the buyers. It looks like we've done so, right? And so even a chart like this. Now, going to, again, larger names, things like Shop, we saw early today, continue to put points on, 5% today. So again, these are all over 5% charts. This is, again, another big name, something from a bit of a COVID winner, but it didn't need specifically COVID to continue to increase in value. It's just a big name in something that's getting bid because it's growth, right? There doesn't even need to be a specific sort of point at which, or excuse me, some sort of a event or something that backs it. It doesn't matter. It's a part of this entire move. It's a part of a flow point, right? And so we're seeing money come in everywhere, just like we talked about retail traders. They're not just buying AMC, they're buying everything, right? And we continue to see that. On the natural gas side and on energy overall, we saw natural gas do a little bit better today. The other side of the equation, again, is when we look at something like XLE. So oil here that I just posted was 4.5%. When we look at something like XLE, it's because this is the equity side. We did see that crude was up. It's due to the fact that we had some take profits from here to go into growth, right? And so this is something that's still happening. We saw with banks as well, right? Everything that we've seen is good for banks. What are we doing? We're taking some of the money that we made from this damn thing over the last, 6 months and putting it towards the thing that's going to put more points on right now. Because banks is long-term, tech is short-term, right? Even though you could have a long-term tech position, you're still going to take profit on it a lot quicker than you are with banks. You're looking for your dividends on your banks. You're looking for your long-term sort of position. This is your savings account, right? When I put money into things that Again, our long-term like energy banks, my dividend fund, that's just my bank account, right? And so when I want to buy something, I'm taking it from my bank account and putting it into something else. These other positions are risk positions that we want to put on, so you got to take it from somewhere. We don't all just piss cash, right? And so you have to take it from somewhere. It's very easy to see where the money's coming from, which is the important point. The other point I made in the morning I want to restate is the gold side. We saw money come from gold to buy growth. This is an important point because we've seen sort of the correlation between Bitcoin and gold a little bit and the way their flows worked. And so now we're seeing a little similar idea. Now Bitcoin tried to get over this level. It's being held at the 40. Put some bid on, getting held. So this is still in here. We didn't, Elon obviously gave it some bid, but we're still seeing cryptos being stuck down. So risk is only going to equity market right now. Only going to equity market. Of course, no institutions are in this right, or at least buying it at this very moment. Some obviously institutions are holding through, but we're not seeing any buying here. They're still buying growth. So that's an important point to still make, is that wherever you look in the flows, or for flows, whether it's the bond market, whether it's the dollar here, or gold, Bitcoin, everything is still coming back to the equity market, and specifically right now the growth side, because everyone wants risk right now. There's an understanding that right now that's where the place to be. Everyone was already in value. You can only buy so many. You can't buy any more banks energy, right? You can transition it and continue the move and try to drive demand through, continuously. When you get paid dividends, you'll be able to obviously reinvest it. But those sort of ideas again are so long term that the thing right now is to buy growth, and we're seeing it. Dollar here has done nothing. Any sort of bid that was coming through here is obviously not founded. It's again a question of what the hell does inflation do to the dollar? I don't think anybody really can answer this question, because the dollar, again, the money supply is at a point that no one understands. And so this chart is still a dilemma. It's hard to find the flow. It's sort of annoying. It'd be nice to be able to again see money go from one place to another, specifically the bond market, because I don't think we're really understanding the volatility in the bond market, just like we see with the equity market, that the spot VIX is at an extremely low point around 16, yet implied volatilities are climbing again, and we're seeing all-time high moves. It's some sort of consequences of what the Fed's doing, pushing volatility to the bond market. And so the bond market making moves, we should be able to see reciprocated in the dollar. Again, as that money exit or enters, it immediately goes to what we look at in this value, because it's either going back to a US backed sort of dollar trade investment, or it's going to a foreign currency as they take profit or enter a trade. We should see all those things become really a new data point in the dollar, so we can look at the dollar index and see how it changes, right? We're not really getting that because of the way that volatility is being toned down. It's basically tone deaf in terms of it. And so it is important that if something does happen here, that we don't really take it at face value. We need to find out why exactly. Just like when this spiked over here, we understood that this actually meant risk on equities, right? Which is the most opposite thing that, again, if you didn't know that point, somebody would just be like, oh, this must have meant the equity market came down because the dollar rose so much. This actually meant the equity market's breaking out. Because as soon as this happened, we started buying growth, right? Which is very strange to think that when this is breaking out, we're buying mega caps. But that's actually what we did, because we looked at this as, oh, this is actually bid for equities. That's completely opposite to what, if you Google it, right? If the dollar goes up, equities go down. That's completely opposite, right? But that's a it depends situation that we understood. The same thing could happen over here to a downside move. That doesn't automatically mean equities go up. We need to find out why the hell is that happening. And I think we're going to get a lot of those. And again, it's just going to be something that we're just going to have to figure out. But I'm sort of losing faith in any sort of historical understanding in the dollar. And I don't think we're really understanding. So at least I have no understanding anymore of what exactly is going on here. In, again, a consolidation or a price movement like this is uncertainty. The market has uncertainty. We all have cash and we don't know what to do with it. So we spend it. That's just what we do. Right? We live in a capitalist society. Fucking spend the money. It's like banks say, stop giving me money. The banks are like, stop giving me money. What are we going to do? Right? You got to put your money in the bank or you got to spend it somewhere else. As I said, I don't put my money in the bank. I put it in the market. So I think we're getting a lot of that. The other point to make is that we've seen a few more numbers, and I talked about this maybe a month and a half ago. I posted some data on boomers. Boomers have been putting their money in the market buying dividends, right? We're seeing a continued growth in the amount of money that's coming in from normal everyday people, not just retail, the people that consider themselves traders, right, that are active, but the investment side are actually putting their money into the market through different sort of ventures than just again, like a 401k is not the type of thing we're looking at, and it's not going into vanguards. We're not seeing it in passive. There's specific stock buying that's to a specific industry, whether it's through a dividend vehicle or if it's an ETF that is tracking something that uh, again is something that they want to be a part of. And most of the time, it's again a dividend or some big name. And this is where that blue chip sort of thing comes in. Blue chips and companies that have been around. We saw Ford, GE. These sort of things are the place I want to go. Ford obviously was a bit down today, but it's sort of not the point. That's already been trending up. We are seeing this sort of inflow continue. What happens when the economy's booming, the equity market's booming, right? What do we see when people look at their accounts, their funds, whatever they're part of through their work, whatever it is, through their own personal, and they see that their portfolios are going up in value? You know what they do? They see that, oh, well, on paper, I have more money. And so they go and spend more cash. They go buy things. They go shopping. They go on vacations. They do things, right? Those things have been happening and are continuing to happen again. We have proof of it while they're also putting more money into their own accounts, going directly into the equity market. We have inflation going on at the same time. All these things loop back to the same thing. They're all the same thing and they all mean up. They mean bullish. It's important to continue to see that we're being covered in so many different areas. One weak area, you could say, would have been that, well, people are going to take money out because the market's so high, right? That's always a risk. People will be like, well, this is pretty high. Let me take the money. We're not seeing that. We're seeing people actually put more money in while at the same time using disposable income to go spend it on something else, which is helping the economy boom and increasing inflation in the first place. And so we continue to see these things back up, back up, back up. And they all, again, lead to higher equity prices. Economy goes up, equity market goes up. What happened during COVID? Economy went down, equity market went up. You know what's a lot better? The economy doing well and the equity market doing well together, because we all feedback loop each other. We're allowed to all sort of prop each other up. We're in that moment. So again, what do? We're going to keep buying. We're not going to stop. There's no reason nowhere in the near term, not at least this year, for a reason to stop buying. Just that's not going to be the case. There will be events that happen and we are going to transition, but it's so important to remember that it's going to be some time. It won't be until next year that we're actually going to have a data that would change the consensus. So again, please don't don't just change your mind randomly on what's going to happen. I can guarantee you the next time we have a pullback, we're going to be buying it, right? It's not always going to go up. If we get a pullback, we'll be buying it. What have we done on every other pullback? Every single pullback you see on this chart right here, in the last year and a half or so, we've bought every single pullback. That's the truth. We've bought every single pullback here. Every single low that you see in here was bought by myself or somebody in this group because that's what we wanted to do, right? And yes, you have to take profit in there somewhere. And so we do our best to transition it. And so again, we push our winnings. We understand that there's a point at which our exponential runs out, and so we're going to take profit on it to enter a new exponential. And if that one gets stopped out, then we'll re-enter it. If it gets pushed down further, we'll buy it on a pullback. That's the way we do it. And that's not going to change for a long time. Not until at least next year. So again, no matter what comes from here, just remember, this is what's happening. And things are not going to stop the economy. Things are not going to stop everyday people from continuing to go out and spend money and everything else, right? And again, it directly leads to this continuing to go up. Whether or not we're hurting ourselves by doing so, it doesn't it doesn't matter. Again, I've talked about the energy thing. I do think we're ultimately hurting ourselves by bidding up oil prices. That's just the direct sort of consequence. It happens, but people are still benefiting from it because it's led the entire boom of equities. If oil, again, if the oil was not the equity side was not up 55% this year, not like 60%, then we would not be where we are. And so it's sort of a direct sort of benefit as is consequence that you're gonna have to pay more for gas for your fucking portfolio to be up. So deal with it, right? Uh, Either way, folks, it was a lot of fun today. I hope you guys made some money. If not, then fucking buy something. Stop. Just buy something. In terms of tomorrow, we'll see. Most likely going to see things continue. We do still have things going on with G7 meetings and everything else. Remember that there's different things, news events that can have short-term price sort of movement, and it's important to realize when it's a news trade or not, right? We don't trade on news. We're aware of it though, and we transition in whatever we need to do, reacting to price, not because of an actual event. But we are aware of these events happening, right? And so keep in mind that there is volatility, or there could be completely flat trading going into FOMC. We don't know. All we can do is be prepared and continue to be a part of it, right? And so keep that in mind. We'll see what it is tomorrow. I expect further moves from the mega caps, but it's been a lot of fun. I think the idea and my opinion of picking up the aggression over those last 2 weeks or so is really a really good timing. Again, sort of an instinct feel to get going a little heavier, and so I'm pretty happy about that because again, you're never gonna know, but sometimes you just got that gut feeling to just put the gas on, and you start to really get it. And sometimes you get it, sometimes you don't. This time we got it, so I'm pretty happy about that. Spoon says we graduated from buying high and selling low to buying high and selling higher. Exactly. That's actually a good way to put it. Technically, if you're buying at a high, it turns into a low if the price goes higher. So absolutely, that's exactly what we do. We hope it happens every time. And he also said a lot more active these last few days, but everything you said will happen did. Just keeping track of a lot of tickers right now. Yeah, we have a lot of tickers. That's why I've tried to be very focused on just mega caps. Trade everything through mega caps and our benchmarks. Again, I mean, it's one thing for me to post so many damn tickers, but it's another thing to realize what's actually leading and actually putting points on. Everything is through mega caps right now. Those FANG stocks on the growth side. And then on the value side, everything is again through our benchmarks of energy and banks. And so we can use those to then you find names and trickle down from there. So again, I would just start in those places and then start to look down. It's again a game of watching as many things as possible, being aware as many things as possible. So when we do see a breakout of some name you've never heard of before, if you do start to see it at a point where you can buy it, then it's just you have the opportunity to buy it. I don't buy half the things I post, right? But it's the fact I'm aware of it that I have the chance to go get it. And so more times than not, I'm going to make money from just being aware, right? And it at least gives more confidence to ideas sort of. Again, I talked about this sort of head and shoulders thing that we saw, this accumulation at Lowe's. And again, not Lowe's the store. We're not accumulating wrenches, but they all look sort of like this apple chart down here, right? But they have a very strong sort of head and shoulders pattern coming out into a breakout from a downturn since January. And so those charts, for instance, all breaking out together. It's not specifically that we have to buy every one of those. We only need to buy one. And again, we've bought some of the ones that put the most points on. And I think last week we got a little hot anyway. So last week we had some charts that really fucking blew up. That I basically if you were a part of some of those, then you really didn't need to do anything else. But this week we're continuing, which is great. So again, don't get lost too much in too many names or anything. Just it's about seeing it. You don't have to do anything with it, but just see it, understand it. Yeah, that's why I take the time to do the charts. It's just about being aware of it, right? There's a lot of things out there, and just remember that those are people, right? It's people actually being active on those charts as well. And those people and their behaviors are the same on all the charts, right? If it looks similar, it's the same feeling, it's the same reasoning, right? It's not because of something else. No one really cares about those little things. It's how the price trades, right? you're going to enter and exit a position, you do it the same way no matter what it is, right? If I'm going to sell you something, I'm going to sell two different items the exact same way, right? Whether I'm selling you a service or selling you an item, I'm going to sell them to the exact same way. That's just how it's going to work. How we do it in trading as well, right? Chart's a chart. Price is price, supply and demand. Doesn't change, right? Basic economics. So enjoy your night, your evening, afternoon, wherever you are, guys. Watch out for some more charts today. I'm going to update some more numbers. I'll probably post charts for everything because having some fun drawing things. But I'll see you guys in the morning. So enjoy.